Hello, thanks for tuning again. This is the week 3 lecture notes of AF3111 Intermediate Accounting 2. And the topic of this week is lessees accounting. And this is in fact a series of 3 lease accounting lecture materials. And in this one, we're going to cover quite a lot of basic concept, as well as we will go through accounting side of the lessees. As usual, a kind reminder: you must get a hard copy of the week 3 notes handy, and have a pen and have some paper if you like to make your own notes. Okay, let's begin with the menu. The menu of this week, we cover basically 2 issues. I think we will spend most of the time on the basics. By knowing the basic well enough, that would help you, in fact, to understand better on the coming weeks of the lease accounting notes, such as week 4 and 5. Okay, and then we will look at the accounting for the lessees, likely in part 2 and part 3 of this teaching materials. Okay, let's begin with the very basic stuff. Okay, and the very basic stuff is, what is a lease contract? What is a lease contract? Well, a lease contract usually involving 2 parties to sign a contract. Okay, we have the landlord and the tenant. Usually the landlord would then have the assets, is the owner of the asset, and then tenant would then rent this asset for a period of time. Okay, now let's define what is a lease contract within the standard Hong Kong FRS 16 leases standard. It is a very recent standard, and it is now effective in practice, and you're going to learn new stuff. Okay, very up-to-date standards which will help you in your internship. Okay, as well as any future professional exams. Let's define it. It is a contract that conveys the right to control the use of an identified asset for a period of time in exchange for the considerations of course in terms of money. So in other words, the 2 party, landlord and tenant, landlord give away the right to use the asset to the tenant for a period of time. In return, over the lease term, the period where the tenant committed to pay for the payment and use the asset, okay, and then the landlord will receive it, okay, and that's basically a contract. Typically how it works. Now, notice that we have another 2 names here. Landlord can be known as lessor, and tenant can be known as lessee. What does it mean by lessor? Lessor is an entity that provides the right to use an underlying asset for a period of time in exchange for money. Okay, and then lessee is in fact that entity that obtains the right to use an underlying asset for a period of time in exchange for the consideration. So it's quite simple. However, okay, you cannot simply use the term lessor and lessee with related to the landlord, the identity of landlord as well as the tenant, unless that rental agreements satisfy the definition of the lease contract stated in Hong Kong FRS 16. Right? Otherwise, you cannot use the term lessor and lessee. So lessor and lessee is specific for lease contract under Hong Kong FRS 16. Okay? And we will go over some conditions or criteria to be satisfied as lease contract after these slides. Now, if you may have the opportunity to look at the standard very often refer to a rental contract in between the supplier and the customers. So suppliers and customers, they are more like layman terms for landlord and tenant. And we're going to use those terms interchangeably. But once we use the term lessor and lessee, it would mean that the contract itself is a lease contract. Okay? Get it? Let's move on and look at the details. What are the conditions to satisfy these definitions of a lease contract? Well, in the definitions of a lease contract, it says very clearly within the standard that arrangement within the contract should meet both of the following criteria. Number one, we must be able to identify a specific asset within that contract. Okay? Must be identify assets. And at the same time, we have to be certain that, in fact, the contract itself would convey the right to control that identified asset, allowing the lessee, or if you like the tenant in layman terms, to control that assets. Okay, looks like a very easy concept, but let's focus a bit more on the criteria, each one of them. The first one is, in fact, the identifiable or identified asset. An identified asset could be either implicitly or explicitly specified in a contract. Well, so what's the problem here then? Well, for instance, if you're renting an asset, right, obviously you usually would specify that asset in your contract, right? So that was explicitly specified. That's no problem usually. However, let's say if your company needs someone to clean the carpet, okay, and then you contact, okay, you employed a carpet cleaning companies, okay, and within that service agreement in between the carpet cleaning company and yourself, your company, that contract specified the use of a specific model of a vacuum cleaner. Okay, if that was specifically stated that you need, right, the carpet cleaning company to use that specific model or types of vacuum cleaner, then in fact you have implicitly identified that assets. Okay, and even though you physically would not use it, but because you request the cleaning company to use that specific asset, that it is an identified asset, implicitly specified in the contract. So be careful, even though you are requesting a service, but if you specify a assets to be used in that cleaning contract, even though it is not renting it specifically, it is still an identified asset, and that contract can still be considered as satisfying the definitions of lease contract within Hong Kong FRS 16. Okay, to be an identified asset, it has to be physically distinct. Okay, portions of a larger assets of be able to physically distinct. So for instance, if you want to rent a computer, then it is physically distinct, or you want to rent a floor of a specific building or specific floor within a specific building, it would be physically distinct. However, it would not be physically distinct if you just want to rent a portion of an asset, such as in the case of 60% of a pipeline's capacity. Now 60%, which 60%? Okay, that was not defined within the contract, so it is not identified. Or in a second example, free to use any of the 20 fiber optic cables, free to use any of them, okay, for a durations of the contract term. So because you did not specify which one you want to use, which cable you want to use during that period, so this is, in fact, this contract will not have an identified asset, and this contract is not a lease contract as defined within Hong Kong FRS 16. Okay, so the first criteria, we kind of understand it now. Let's look at the second criteria. Can the lessee or the customers be able to control or having control the rights to use that identified assets? So how do we consider this situations? How do we interpret that? Well, if you want to say that in fact the customers has satisfied, or this contract has satisfied the right to control the asset and conveyed it to the lessee or the customers, then the customers has the right to both, number one, direct the use of these assets, and customers has the right to operate it or direct others to operate that asset in a manner that it determines, with the supplier, the landlord, having no right to change those operating instructions. Okay, now you can use it by yourself or you can direct others to use it. Okay, and number two, you can obtain substantially or the benefit. You don't just use it, but you can obtain the benefit, economic benefit, from directing the use of that assets. The customers can obtain the benefit directly by holding it or using it, or indirectly by sublease it, that asset, to another entity, right? And then in that case, the customers can obtain a rental from another customers, right, of that lessees. All right, okay. So this is like the very fundamental concept, right? You should be able to identify a specific asset within a contract to be used by the lessees. Secondly, the lessee should be able to have the right to control the use of that assets. Okay, one more issue before we look at an example on whether contracts should be satisfied or should be defined under the Hong Kong FRS 16 as lease contract. One more conditions. Okay, the condition will be related to what we call substantive substitution rights. Okay, let's back to the basic stuff. First thing you have to look for in a lease contract is, would there be a physically distinct asset specified in that lease contract? In other words, can you see an identified asset? If the answer is no, then in fact that contract would not be a lease contract. Okay, but if you can specify that assets, okay, yes, then the next things you have to ask yourself is, can the supplier or landlord, or if you like more specific, lessor, can substitute this asset? What does it mean by substitute? That means the supplier can change it and change that asset that you're using it and replace it with another model, for instance. Okay, right. If the answer is no, okay, that's no problem. Then of course you have to assess whether the supplier has conveyed the right to control the assets to the customers, the lessee. If the answer is yes, of course, the contract itself is a lease contract. But what happens if the suppliers can in fact substitute this asset? Okay, so if a customer does not have the right to use an asset, if the supplier has a substantive right to substitute, so the supplier has a substitution right, and that right is in fact substantive only if both of the conditions exist. Now make sure you know the difference, right? The supplier could have a substitution right, but if the right is not substantive, right, then that's okay, no problem. Okay, we can then consider whether the supplier has conveyed the right to control that asset to the customers. But we are still at this stage, right, where we have to see whether that substitution right is substantive or not. Okay, if it's a substantive, I'm afraid that in fact the customers do not have the right to use and identify assets. So to be substantive, both conditions have to be exist. A, the supplier has a practical ability to substitute alternative asset further the period of use. The supplier can in fact substitute another asset for the customers, and at the same time the supplier would benefit economically from exercising such a right to substitute the asset. Right? So for instance, if the supplier substitute maybe asset B with asset A, then the asset A can then be used or rented to another customers. Okay, so if it is substantive, right, if yes, in fact the substitution right is substantive, and in fact the supplier can benefit from it, I'm afraid that in this case the contract is not considered to be a lease contract because the substitution right is in fact substantive. Alright? However, there are exceptions. There are exceptions. The exception is, in fact, right, if the supplier has a right to an obligation to substitute assets, suppliers can substitute the asset only on or after either a particular date stated in the contract or a specific event happens, such as when the asset doesn't work, it needs repairs, then the supplier's substitution right would not be considered as substantive. Okay, not substantive at all, because the supplier does not have the practical ability to substitute alternative asset through the use period. In this case, no. And if this is no, right, then of course we still have to consider whether the supplier would convey the right to control the use of the asset to the customer. If the answer is yes, yes indeed, it is still a lease contract. Okay, so the flow is, can you identify an asset? Yes. Would the supplier has a substitution right, which is in fact significant, substantive? Okay, if no, okay, if no, then if this is not going to be having a substantive substitution right, then likely to be a lease contract. If it has a substitution right, right, and it is going to be substantive, then of course the contract is not a lease contract. Or even if there is a substitution right, but then that substitution is only on a specific situation, so particular day, that situation could be a repair, then the substitution right would not be considered to be substantive. Then in fact, the answer here would then be no, and it is likely to be a lease contract as well. Okay, now sometimes it would be very difficult to in fact determine whether that substitution right is substantive or not. They may not have sufficient information for you to decide at the date when the lessor and lessee sign the contract. So we know it, and evaluations of whether the substitution right is substantive would be based on facts and circumstances only at the contract inception, the day the two parties sign the contract inception. Right? In this case, you consider all the facts, possible facts that you know at the contract inception date, right? The two parties sign the contract, right? And then make a judgment to decide whether the substitution right is substantive or not. If the customers cannot readily determine whether the supplier has a substantive substitution right, then easy, the customers may presume that any such substitution right is not substantive. Okay? Right, let's move on and see whether you understand the concept. Right? Okay, now if you still don't understand, go back a few, maybe 1 or 2 minutes just to look at the slides again before you look at this example. In this 3 example, you have to test yourself whether you know those contracts will be considered as a lease contract as per Hong Kong FRS 16. Okay, the first one. X lease a space, right, with a university to sell daily drinks and snack. And the contract states that 150 square feet, then the space may locate at any one of the building's ground floor entrances, just like in Poly U, right? You can have many different floors or block, okay? And the contract, in fact, did not specify which areas of 150 square feet can be used to sell daily drinks and snacks. And the university has the right to change the location of the space allocated to X at any time. In this case, it is clearly that there won't be possibility to find out exactly where we can use that area to sell drinks or conduct business, right? So in this case, although the amount of space uses is specified, however, there is no identified asset because we don't know where we're going to sell it. okay, where we're going to conduct our business. And if that is the case, the contract is for the space that can be changed at the discretion of the university. Therefore, because we don't have an identified asset, conclusion is simple. This is not a lease contract. Alright? Because it is not physically distinct. Number 2, why leases 3 servers? Well, obviously 3 servers physically distinct, right? And that can be exclusively used by Y as well from IT supplier for 10 years, equivalent to their economic lives. These 3 servers cannot be used by other customers. Okay? Y decides to configure the server and determine what and how to store and when to transmit and backup data. So Y has full control of the service. Supplier is responsible for repairs and maintenance with his own IT staff. And supplier is obliged to substitute backup servers during malfunction time or maintenance period. Right, so it seems to be that the supplier in fact has a substitution right. Okay, but that substitution would only be under a certain event or circumstances such as malfunction time and maintenance period. So suppliers can only substitute when repair and malfunction is needed. So in this case, it is an exceptional case. The substitution right is in fact not substantive. Okay, and so we know it. We do have an identified asset, and the substitution right is not an issue. Then we have to consider whether Y can in fact obtain the right to control that asset. And we know that it is quite true that Y can consume all the economic value of the servers, can configure the design and decide what and how to use the servers. And in conclusion, this contract must be a lease contract. Okay, and finally, number 3, Z leases a shop in a premium mall on the 3-year contract. Landlord can require Z to relocate to another shop, but has to pay relocation costs. Okay, stop before we move on. We know Z can lease a specific shop in that mall. So that's okay. It's physically distinct, exclusively used by Z. However, excuse me, the landlord can substitute the shop during the 3-year period. Landlord does have a substitution rights. Okay? Right, now, we know it at the inception date of contract date, the date where the 2 parties sign the contract. It is unlikely that the landlord can benefit from relocating Z unless a new tenant is willing to pay sufficient rent to cover the relocating costs. So at the day when 2 parties sign the contract, it is unlikely, we believe that, or at least Z believes it, it is unlikely that the landlord can benefit from relocating the shop, right, to other tenants that are willing to pay sufficient rent to cover relocating costs. So based on the estimation that we have at the inception day, it is clearly that the substitution right is not substantive. Okay, now there are always uncertainty in financial reporting, but you must make a guess or best guess, okay, at the point when you try to determine like a contract, like in this case, or even how to recognize it, a specific asset or liability. So a lot of uncertainty were there. You must make a guess. All right. So we apply the same rationale here. You sign the contract on that day, right, with your landlord, and therefore you must decide whether this contract would satisfy Hong Kong FRS 16. Okay, you cannot defer that recognitions further on, or that considerations later on. Okay, so conclusion, it is a lease contract too. Right, okay. Before we move on to talk about the accounting model for the lessees, let's talk about some scope restriction. It's not going to be a huge scope restriction. The company should apply Hong Kong FRS to all leases, including leases of right-of-use asset in sublease. Okay, so I would talk about the terms right of use of assets later on. So all leases provided that satisfy the definitions of lease contract within Hong Kong FRS 16, then in fact should apply Hong Kong FRS 16 in terms of accounting. However, the following cannot apply. A lease to explore for or use minerals, oils, natural gases, and B, leases of biological assets held by a lessee, service concessions arrangement, license of intellectual property granted by a lessor within the scope of Hong Kong FRS 15, and rights held by lessees under licensing agreement within the scope of Hong Kong AS 38, such as motion picture films, video recording, plays, manuscripts, patents, and copyrights. Okay, they would be outside the scope of Hong Kong FRS 16. And the lessees may, but not required to apply Hong Kong FRS 16 to lease of an intangible assets other than those described in E. So if the two parties involving leasing and intangible assets, in fact Hong Kong FRS 16 can apply. Okay, let's move on and talk about lessee's accounting model. The model specifies that lessee, once the lease contract satisfy the definitions of once the contract satisfies the definitions of lease contract within Hong Kong FRS 16, then the lessee would apply a single model for leases. We call that right of use approach. What that means is there's only one model, no other choices. And upon commencement date, the day where the lessor allows the lessee to control that identified assets, and the lessee should in fact obtain the right to use an asset, okay, for a specified period, and would recognize an asset reflecting that right, okay, and the liability for its obligation to pay rentals. So it makes sense, right? It is in fact consistent with the definitions of assets within the conceptual framework. Now, as a result of signing this lease contract, the lessee can now control this identified asset over a period of time. Therefore, it should be considered as the lessee's asset rather than treating it as a rental expenses, just like what you've learned in FA. That doesn't apply anymore unless, of course, the contract does not satisfy Hong Kong FRS lease contract. Okay, so if it is a lease contract, then the lessee would have control the asset over the lease term. The lessee should recognize an asset. We call that right of use asset. And at the same time, a liability should also be reported or recognized, a liability for its obligation to pay rental. Okay, so we're going to have right of use of asset and lease liability at the day when lessee can control the asset and recognize these two items on the statements of a financial position. That's the principle. Okay, now just give you some ideas, right? Commencement date doesn't have to be the date the two parties sign a contract in reality. Okay, in reality, they can sign the contract at inception day, which is the date, the earlier of two dates, the date where the two parties sign the agreement, and the date of the commitment by the parties to the principal terms and conditions of the lease. If the asset, the lease contract, does involve a great amount of money, okay, and also maybe for long term, it is likely that both lessor and lessee would sign a memorandum first, okay, before they sign the actual contract. So inception date is the earlier of the two. To make it simple, in I2, we were assuming that inception date would be, in fact, the date of the contract. Okay, so at the date of the contract inception date, no accounting entry. The accounting entry would only happen at the commencement date when the lessee control the asset, and started from that day onwards, they would then recognize the right of use of asset and lease liability. Now, before we go in depth into the accounting side, the followings are quite important because I'm going to show you two important aspects of lease accounting, which is you have to know it very well. to determine the lease term, number one, to determine lease term, as well as number two, to identify lease payment for accounting purpose. Let's start with lease term. Lease term. Lease term is determined at the commencement date based on the non-cancelable period for which the lessee has contract to lease the assets. Okay, together with both the terms as follows. Okay, so including the periods covered by an option to extend the lease if the lessee is reasonably certain to exercise that option. Stop. Okay, so in other words, lease term has to be determined at the commencement date, and usually it would involve like there will be a non-cancelable period, and usually we call that primary period. Okay, primary period. And then there could be a secondary period as well, right? Secondary period, which would be like the period option to extend the lease. Option to extend the lease. Okay, right. So if it is reasonably certain that the lessee would lease the asset for another year, right, then that secondary period would be included in the lease term calculations. Okay, but how can we be certain if we give that options to lessees? How can we be certain that lessee will lease it? Well, we have to assess, is it reasonably certain that lessee will lease it? How do we assess it then? We need to give you some guidelines later on within this slides. And also, it may include a period covered by an option to terminate the lease if the lessee is reasonably certain not to exercise the option. So for instance, if the initial period is going to be 6 years, and then there is an option allowing the lessee to terminate the contract in the last year of the contract, and if it is reasonably certain that the lessee would not exercise that option to terminate that period, that 1 year, then in fact this year would be included in the lease term as well. Now, for IA2 purposes, to make it easy for you, we would take away that option to termination in basically all questions, so don't worry about that. And the final one here as a note, notice that in here we talks about option to extend, so it is like if you like the lease renewal options or a secondary period, right, allowing the lessee to decide whether it wants to lease the asset further or not. However, sometimes in a lease agreement, it is possible that the lessor may offer the lessee an opportunity to buy the asset at the end of the lease term. We call that purchase option. So purchase option, for instance, this is the primary period, and if there is no such secondary period here in the question, for instance, and then in year 5, lessee may also consider to buy the asset, okay, exercising that option to buy the asset. So please do not confuse the term option to extend and the option to buy or purchase option. Okay, let's focus more on the criteria to assess whether the option to extend the lease will be reasonably certain or not. Well, the standard then gives us some guidelines here. The evaluations of whether it is reasonably certain that those options will be exercised would consider all factors here, including with the existence of the purchase option, which means to buy it rather than to having a secondary period, or a lease renewable option, which is same as option to extend, let's say, i.e. secondary period, and its pricing. Well, so in other words, are they cheap? If the rental set at the year 6 is going to be very cheap, right, as compared to the estimated market rental payment at the end of within year 6, right? So if this is cheaper, very cheap, significantly lower than that, say for instance, if the price set to be paid as a rental in year 6 is $1, and the market rent based on year 0 estimation is going to be, let's say, $1,000. So $1 would be extremely cheap as compared to 1,000. Then you may say at the inception day or commencement day that in fact the lessee is likely to lease the asset further for 1 year. Okay, so if the secondary period payment is cheap, or another term we use is bargain, then you may assuming that the secondary period will be included in the lease term. It will be exercised by the lessee. Okay, same thing happened to purchase option. Same concept. If the buying price of the asset is going to be cheap as stated in the contract, and then the estimated market value of this asset at the end of year 5 is relatively or comparatively more expensive, then we can claim that in fact purchase option will be exercised. Alright? And other factors could be considered as well. So I skipped the second point for terminations option because we will not cover that. Such as number 3, we will consider further is what happened is if the cost of returning the asset in a contractual conditions or location is expensive. Okay, so for instance, you lease the assets for 5 years. If you want to return the asset back to what it should be, for instance, you may have installed your asset in your factory and now you have to remove it. There will be costs of returning the asset, right? If it is too expensive, right, as compared to using the asset for another year, then why not rent the asset for another year? Okay, that will be one of the considerations. Or you have make a significant customization on that asset. Okay, then it would be better that you use the asset for another year as well. And at the same time, importance of this asset to your operation, to the lessee's operation. If you needed the asset to produce some products, okay, but the model of this asset, this machine, for instance, will no longer be produced by any manufacturer, then it is likely that if you want to continue with your business, then you must lease this asset further. Okay, so those are the considerations you need to know. Now, before we take the break, the first break, I want you to focus on this final example to determine lease term. Remember, the concept here is lease term, you need to consider, first of all, the primary period, the non-cancelable period, as well as the secondary period. Would the secondary period be considered within the lease term? How do we decide? Well, only if we believe that it is reasonably certain that the lessee will lease this asset further. And when do we make that judgment? We will not make the judgment at the end of the primary period. In fact, we make the judgment at T0. Okay? Based on our best guess. Okay, let's look at the first example. P enters into a lease for equipment. That includes a non-cancelable period of 4 years. Okay, just like my diagram at the bottom. And there is a 2 years market price renewable options. Okay, 2 years, yeah? There is no other factors indicating that P is reasonably certain to exercise the renewal options. So you don't have to judge it. We give you sufficient evidence to make the judgment. Okay, you don't need further evidence. We were told that in fact there is no factor, okay, no other factor indicating that P is reasonably certain to exercise the option, and the option is in fact offered market rates. Okay, so it may not be a bargain price at all. So definitely it is unlikely that P would lease the asset further for 2 years. So lease term in this question is going to be just 4 years. Okay, let's look at number 2. Q enters into a lease for a building that includes non-cancel period of 4 years and 2 years market price renewable options, just exactly like part 1. Before it takes possession of that building, Q, the lessee, spend a lot of money to do their leasehold improvements. And such improvements are expected to have a great value or significant value at the end of year 4. And that value can only be realized through continued occupancy of that leased property. So to fully utilize all the costs you have spent on the leasehold improvement, it is likely that you need to continue using the same property. So again, the information provided here would then help us to decide whether Q will lease the asset further. Well, the conclusion is simple. Q is likely to lease this item further, and therefore the lease term will now be 6 years for this case. Now, as I said, there were two important elements you have to understand fully before we teach you the accounting side of it. So the first one is lease term, and I just covered it. Okay, so let's take a short break, and after the break we will continue with the second element, okay, which is crucial for lessee's accounting. Let's take a break and come back later.